Imagine you are right in the middle of a hype cycle, and everyone around you keeps saying the same thing. This time, it is different. Analysts say it, influencers say it, your friends say it. The charts seem to confirm it. Everything is going up. Companies are called indispensable, untouchable, too important to ever fail. And the moment you carefully ask if this maybe looks a little like past bubbles, you get a smile and a shrug. Yes, but this is AI. This is the future. The old rules do not apply anymore. In the year 2030, NVIDIA was sitting right in the middle of that story. And to understand what was really happening, we have to step back to a very different time, the 1960s and the 1970s of the 20th century, when the Nifty 50 rose to glory and then fell apart. The Nifty 50 was a group of large, successful American companies that investors called one-decision stocks. You only had to make one choice: buy. Selling was, according to the common belief, never really necessary. These companies were seen as so good that they would simply keep growing forever. They were dominant in their industries. They had strong brands, predictable earnings, and a reputation for safety. Investors were willing to pay higher and higher multiples because they believed quality justified any price. Until reality caught up. Not because the companies suddenly became terrible, but because even the best businesses in the world cannot trade forever at completely detached valuations. The Nifty 50 crashed, and investors who thought they were safe got a brutal wake-up call. Fast forward to the year 2030. AI is everywhere. Language models write text. Generative systems create images and video. AI assistants sit in every phone, every office, every industry. NVIDIA has become the symbol of that movement. It supplies the chips, the infrastructure, and a big part of the software stack underneath. Revenue is rising, margins are fat, demand seems limitless. The media call NVIDIA the backbone of the AI revolution. Stock charts look almost vertical. In talk shows, people say openly that if you do not own NVIDIA, you are missing the train. This is exactly the moment when parallels with the Nifty 50 become both dangerous and interesting. Just like back then, it is not the companies themselves that are unhealthy. NVIDIA is shipping real products into real demand. AI is not a fantasy, but a technology already generating visible value. The bubble is not in the technology. It is in the projection. Investors start dragging future profits forward at a speed no business on Earth can match. They quietly assume that everything from energy to regulation to geopolitics will bend to fit the growth curve of AI. That assumption is the illusion. In that year, the market splits roughly into two camps. The first camp says this is the new Nifty 50. NVIDIA is so dominant, so deeply embedded, so mission-critical, that it is basically a buy and never sell stock. The second camp says this looks a little too much like the original Nifty 50. Amazing businesses, but dangerously stretched valuations. And just like in the 1970s, neither side is completely wrong. The companies are exceptional. The prices are exceptional too. You can see the hype around AI and NVIDIA everywhere in the culture of that moment. YouTube channels pump out endless deep dives. Short-form clips fly by with people claiming you can get rich owning AI stocks. Articles go viral about how a single investment in NVIDIA could save your retirement. At the same time, more serious reports appear from research institutes, warning about very real risks: energy consumption, data concentration, geopolitical dependence on a few suppliers. But in the day-to-day price action of the market, those nuances barely show up. The stock mainly reacts to the story, not the footnotes. Looking back from the year 2072, the obvious question is, was the year 2030 truly a bubble? The honest answer is both yes and no. Yes, in the sense that valuations temporarily drifted away from realistic growth paths. No, in the sense that the underlying technology was not made of air, but of fundamentals. Many AI companies that traded at absurd multiples in that period do not exist anymore. They were overtaken, acquired, or regulated into irrelevance. But the infrastructure they helped to build did not disappear. The data centers are still there. The chips are still there. The frameworks and tools are still there. NVIDIA lost value in corrections, but it was never wiped off the map. In that sense, the story really does rhyme with the Nifty 50. The businesses survive, the expectations are what crash back to earth. There is, however, a crucial difference. The AI wave truly changed the way we live and work. The quality of that revolution was, in hindsight, not exaggerated. What was exaggerated was the speed. Investors wanted the world of the year 2050 to be fully priced in by the year 2030. When that did not happen, the pendulum swung the other way. Overvaluation turned into undervaluation. Euphoria flipped into disappointment. NVIDIA lived through both extremes, precisely because it was not selling a fashion product. It was selling raw compute. That is what makes the Nifty 50 comparison useful, but incomplete. In both stories, you have strong companies, obsessive valuations, and a painful correction. In both stories, the issue is not business quality, but the price paid. In both stories, there is a deep human pattern underneath. The tendency to believe that something which is popular and successful today will stay that way forever. In modern terms, fear of missing out and narrative-driven investing. The real lesson of the AI bubble around the year 2030 is not that you should never have bought NVIDIA or that you should have held it blindly, no matter what. The real lesson is that even when you pick the right technology, your outcome is still dictated by timing and psychology. NVIDIA was a winning horse in a winning sector, but anyone who stepped in during peak hype with the belief that the line could only go up was setting themselves up for pain. People who understood that technology moves in waves, not straight lines, had more patience and, over the long run, much better odds. From the vantage point of the year 2072, we can see that the world promised in those years did eventually arrive, but by a rougher path. AI is everywhere. Compute is infrastructure. NVIDIA is deeply integrated into the background. The bubbles, spikes, and crashes have faded into one long adoption curve on a log scale. The echo of the Nifty 50 is still there, but now as a warning, even if you are on the right train, you can still get on at the wrong station. And that is the uncomfortable truth behind every hype, including the AI mania that crowned NVIDIA in the year 2030. Most people are not actually betting on technology. They are betting on a story about time. When that story runs ahead of reality, a bubble is born. When reality finally catches up, the bubble is gone, but the infrastructure remains.